Hello everyone, and welcome to another meeting with the expert. This time, as you can see, we will be talking about the psychology of break-even trading and how to get rid of it. This presentation is made with our partner, the globalbdtrading proprietary company that allows day traders to trade the US stocks. Let's get to the next slide. Of course, the second slide is the disclaimer. We are going to start with the quote from Bill Lipschultz, the legendary trader on the Wall Street, who said, "If the most traders would learn to sit on their hands 50% of the time, they would make a lot of more money." So today we are going to take a little bit deeper look into this quote, and we are going to talk about the break-even trading. What is that break-even trading? Why this is counterproductive for, of course, some people, and why the other people, the other traders and investors, see this method as a very constructive and helping, very resourceful method to carry on the trading activities. The main question that will be present during this presentation is, how can a trader overcome becoming obsessed with profits and being emotionally unprepared for the realities of losses? So, as you can see, we will talk a little bit more about losses, about how to get, how to prepare for the losses in trading, and is the break-even a good strategy, a good trading activity to carry on in the real trading environment, and of course real accounts. Being profitable in the financial market is where we all want to be, basically. How we measure this is after quantifying our results in terms of profit versus losses. Yet the measure cannot be by itself sufficient enough to sustain our motivation. All traders have a periods of losses on their road to profits. It's the natural and more logical way of trading development. As a result, a single-minded desire for profits might be itself a factor in furthering losses even more deeper, and actually reduce the potential of success. For once a person desires profits, like every beginner trader that has a first contact with the financial markets, what he wants is, of course, plenty of profits. He wants only the profits, fast profits that doesn't require a lot of work, and the profits that will come to him without any work on himself, on the strategy, on the trading environment, on his mental activities, and of course it will stay with him forever and ever. So once a person desires profits, resulting losses on the way to the profitable account turn into, of course, disappointments and frustrations, and that means that experiences may then unleash a host of destructive emotions, other destructive emotions. The problem then becomes how we handle these losses, and not the fact that they occur, because losses will occur whether you like it or not. The losses are part of a trading. Much more important than occurring losses are the ways that you can handle these losses, because they will happen sooner or later. And of course, the question is whether the break-even is the correct strategy, correct trading behavior to cope with losses. How can a trader overcome becoming obsessed with profits, like every new trader or every even advanced traders? They want profits, of course, because this is why they trade, to make a lot of profits. And how can a trader be more prepared for the realities of losses? Well, the solution I'm going to tell you right now is to step outside the conventional profit and loss paradigm that dominates us, and realize that between the realm of profits and losses there is a neutral zone that allows the trader to pause, right? From a mathematical perspective, this neutral zone is represented by the number of 0. Obviously, 1 moves from negative numbers of losing trades to the positive column of winning trades, right? This is the rational and very old conventional paradigm way of doing the measurements of the profits and losses. You go from minus when you are under the line or in debt, or you have a negative balance, to profits when you are on the plus side of the balance and you making money. Between that two states is actually 0, the moment of pause. But having trades that are break even, which means the trades that were exited on 0, so they neither negative, neither positive, they didn't brought a trader any profits, but the trader didn't lose anything. However, mathematically they are looking like a break-even trades on 0. That means there is something else going on here which needs our attention. So having that trades that are break-even or 0, as they say, 0 on profit and loss register, or reasonably near that range, because sometimes you have to pay the commissions or swaps or something like this, is actually a very good outcome. I'm gonna repeat that again. Having trades that are break even or 0 on the profit and loss register, or reasonably near that range, is actually a very good outcome. Why? Well, foremost, among its benefits is it allows one to keep intact the capital at risk for another and perhaps better trade. You can trade the financial markets as long as you have the capital to trade it. If you have a margin call after margin call after margin call, if you want to top up your account, eventually you're gonna go burst, right? So as long as you have the money on your account, on your deposit, you are able to trade, and you can wait to risk another trade for a perhaps better outcome. Okay, breaking even might not elicit the praise of others, but it is a sustaining event. How you get to break even is also important, because if the 0 entry on the trading log or on the trading journal or diary is the result of a profitable trade turning into a loss, it may represent an very keen observation by the trader that the conditions, market conditions, have changed, and getting out is preferable to seeing a negative numbers. So the trader closes the trade prematurely before stop loss and take profit was hit, because he sees that the trading conditions, the market behavior changed so much that this trade might not, the odds that this trade will result in a profit are lesser than there was when he had started this trade, of course, right? On the other hand, a break-even trade might be the outcome of a quick exit by the trader who is fearing a loss. So sometimes the traders open a transaction. The transaction lasts for some time, but then, especially if you are a day trader, the transaction is closed very quickly, right? Because the trader thinks, oh no, this is too great risk, or the market is too violent, or the market is not violent at all, as I expected, maybe, or maybe any other reason is applicable here, and he closes the transaction by the main underlying emotion that is the result of the traders activity, of course, is fear, right? So the trader closes the trade out of the fear. A frequent number of those break-even trades in one's trading account might reveal the trader is becoming overwhelmed by the setting in of destructive emotions, right? Such as anxiety, guilt, fear, or even greed. We all know that this is not an uncommon experience. Plenty of traders experience something like this or similar, especially if they are beginner traders. However, the break-even trade also can become a huge opportunity to evolve into a major trader by going beyond an obsession for profits, right? So even if you trade, especially on the beginning and later on, and you keep closing your trades on zero or in some reasonable area from the zero, right? Then of course this actually might be perceived as a constructive, and might be seen as a huge opportunity to evolve further, not only by seeing oh no, I didn't make any money on this trade. Well, you didn't lose money as well. And as a beginner trader, your first let's say your first try, your first something that you should do much more often than making a profit is to protect your capital by making only the reasonable and high opportunity, high probability, basically high probability trades only, right? To preserve your deposit, to preserve your capital, because as I said in the beginning, as long as you have the capital, you can still trade. If you run out of the capital, you have to either top up or you go, of course, bust. Many of us approach each trade as like an arrogant fashion, like an arrogant way, as the chance to simply grab some profits, right? This concept reflects a commonly held view that trading is like a zero-sum battle between the trader and the market, where the trader wins or loses against the market. But some of the best trading methods produce a win ratio just above 50% or even less. However, if you have a winning ratio below the 50%, that's called gambling. The majority of trades are roughly on break even. Every flat or small losing trade keeps us in the game. As a trader, as I said, we protect our capital, our deposit. Traders get in trouble when they stubbornly hold onto a trade, refusing to believe their hunch, the system, the strategy, or simply their timing is wrong. So they cannot admit to themselves, I made a mistake, this trade is not doing well, it's better for me to close it now or at break even, and it still will be a good trade. However, it won't be profitable. The outcome will not get you any profits. You might even have some small losses because of the swaps or the commissions. However, by doing this, you are going to evolve. There is a better and ultimately a more effective approach, as I said. What if we seriously reconfigure our mindset and view the financial market as a big, huge, complex place full of opportunity that, when properly understood, provides valuable trades? We would experience a shift in our entire mental and emotional focus, because the market then becomes not our enemy, but a field of opportunities that, when understood, can produce profits. Those who take this stance do not demand, not expect any profits to be handled over as if they belong to them already. They don't take these profits for granted from the very beginning. Instead, they aspire to obtain a great trade by recognizing winning patterns, winning market behavior that makes the odds for correct, profitable setup much more higher. Profits become what we earn by applying our knowledge. All right, the market becomes our partner. It is very, very productive and constructive kind of a relationship. The ability to trade each day by emptying ourselves first of ego satisfaction might not be that easy, but it is the distinguishing characteristic of traders in the process of transforming and evolving themselves from frantic beginnings, emotional beginners, to a level of competence, of a pro abilities and discipline. So if your next trade is neither a profit nor a loss, what you need to do is to pause and relax, because in the case of a trading, the result of a zero or break even is a positive number in the long run, because of course of the very correct assumption that what you need to do is to follow your strategy and execute the trades according to it, not on an emotional basis. And in terms of the money management, the first thing to do is to always protect yourself, always protect your deposit, always protect your money. The profits will come to you eventually as a result of applying a high probability trades with the correct mental setting and correct market, using the correct market behavior. Sometimes it's time to trade, sometimes there is a time not to trade and go fishing, basically, as the as Paul Tudor Jones, I think he said that word. So please change your approach to the break-even. Don't treat this trading behavior as a deconstructive, as a negative, actually, especially if you are beginner trader and you're learning how to change your everyday habits because they are counterproductive on the financial markets. And you need to gain this knowledge that this trade that is on a break even is a positive number in the longer run, because you still will have the potential for trading, having your deposit and having money ready to risk on another trading setup. So this is how you get rid of the wrong assumptions, wrong dealing with the break-even trading if you are profits hungry, which is again wrong approach to the financial markets. And again, that's one of the brick more to answer the question why people is losing money on the financial market in massive way. Thank you very much for listening to these presentations, and of course please remember that the partner of our meeting was the globalbdtrading proprietary trading firm from Katowice, Poland. If you feel the need to contact this company, please refer to the contact means provided here. And please remember that this is the company that is a professional trading room in Poland and allows day traders to trade on the Wall Street, basically on the various New York exchanges like Amex and the others. So if you have a need to contact this company, please refer to the email, webpage, Facebook, Twitter, or any other means provided here. From my side, that's everything for today. Thank you very much again for watching this presentation, and I hope we will see again. Take care and bye bye.